Here is a summary of Cisco's Q2 2026 earnings call, focusing on key financial metrics, management commentary, and future outlook, suitable for reading aloud. Good afternoon, everyone. Today, we'll delve into Cisco's financial performance for the second quarter of fiscal year 2026. Leading the discussion are Chuck Robbins, our Chair and CEO, and Mark Patterson, our CFO. Q2 fiscal year 2026 financial highlights. Cisco delivered a very strong quarter, exceeding expectations with double-digit growth in both revenue and earnings per share. This performance puts the company on track for its strongest fiscal year yet. Total revenue grew by an impressive 10% year-over-year to $15.3 billion. Product revenue saw robust growth of 14% year-over-year, reaching $11.6 billion. This was significantly driven by demand for AI infrastructure and campus networking solutions. Services revenue experienced a slight decline of 1% year-over-year, totaling $3.7 billion. Non-GAAP net income increased by 10% year-over-year to $4.1 billion. Non-GAAP earnings per share, EPS, grew by 11% year-over-year to $1.04, outpacing revenue growth due to strong operational efficiencies. Non-GAAP gross margin was 67.5%, a decrease of 120 basis points year-over-year, primarily due to product mix and higher memory costs, partially offset by productivity gains. Non-GAAP operating margin came in strong at 34.6%, exceeding the guidance range. Product orders showed exceptional growth of 18% year-over-year, building on double-digit growth from the previous year. This broad-based demand was evident across various customer segments and geographies. Key growth drivers and business performance. Networking. This segment was a standout performer, with revenue up 21%. Strength was observed across campus switching, data center switching, wireless, service provider routing, enterprise routing, and compute. The demand for next-generation campus networking products, coupled with AI-native capabilities, is driving a significant refresh opportunity. AI infrastructure. Demand for AI infrastructure, particularly from hyperscalers, accelerated significantly. AI infrastructure orders from hyperscalers reached $2.1 billion in Q2, and Cisco now expects to take over $5 billion in AI orders and recognize over $3 billion in AI infrastructure revenue from hyperscalers in FY26. Beyond hyperscalers, Cisco sees a pipeline of over $2.5 billion for its high-performance AI infrastructure portfolio from neocloud, sovereign, and enterprise customers. Security. While overall security revenue declined by 4% due to the ongoing transition at Splunk and declines in older products, new and refreshed security products are showing strong traction. Over 1,000 new customers purchased these products in Q2, representing significant quarter-over-quarter growth. Cisco expects the organic Cisco security portfolio to approach double-digit revenue growth by the end of Q4 FY26. Collaboration. This segment grew by 6%, driven by strong device sales and growth in CPaaS, WebEx, and Cloud Contact Center. Splunk. The transition to cloud subscriptions continues, creating a drag on revenue growth in the short term. However, cloud subscriptions enable greater adoption, expansion, and faster innovation. Splunk is on track to add 1,000 new logos for the year. Management's commentary. Chuck Robbins, Chair and CEO. Chuck expressed strong satisfaction with the quarter, highlighting its robust performance and Cisco's positioning for the AI era. He emphasized record revenue and EPS growth. Q2 was a very strong quarter with revenue and earnings per share both growing double digits and coming in above the high end of our guidance ranges. We delivered record revenue in Q2, putting Cisco on track to deliver our strongest year yet. AI infrastructure as a key driver. Our strong top-line performance was driven by robust demand for AI infrastructure and campus networking solutions. He detailed significant growth in AI orders, particularly from hyperscalers, and highlighted Cisco's unique position with its Silicon One architecture and new high-performance chips. Addressing memory price increases, Chuck outlined a proactive strategy including price increases, revising contractual terms, and leveraging Cisco's operating scale and supply chain expertise to manage industry-wide component price dynamics. He expressed confidence in their ability to navigate these challenges better than peers. Broad-based demand. Overall, total product orders grew 18% year-over-year, demonstrating the broad-based demand we see for our technology globally. Innovation and customer commitment. Our innovation engine is firing on all cylinders, and our commitment to customers has never been stronger. He pointed to advancements in networking, AI-native security, and operating systems as critical for the AI era. Campus refresh opportunity. The ongoing campus refresh is viewed as a multi-year, multi-billion-dollar opportunity, with new capabilities and an installed base nearing end-of-support fueling demand. Mark Patterson, CFO, Mark provided detailed financial insights and outlook, reinforcing the strong execution, financial discipline, and profitability. We had another impressive quarter with record revenue in Q2, surpassing our expectations for both operating margin and earnings per share, illustrating our ongoing operational efficiency with earnings per share growing at a faster rate than our revenue. Recurring revenue and subscriptions. Total remaining performance obligations, RPO, grew 5% to $43.4 billion, with product RPO up 8%. Annual recurring revenue, ARR, finished at $31 billion, up 3%, and total subscription revenue represented 51% of overall revenue. Capital returns. Cisco returned $3 billion to shareholders in Q2 through dividends and share repurchases. He also announced an increase in Cisco's quarterly dividend to 42 cents per share. Balance sheet strength. The company ended the quarter with $15.8 billion in cash, cash equivalents, and investments. Operating cash flow was $1.8 billion, impacted by a final transition tax payment and investments to satisfy rising demand. Gross margin management. Mark acknowledged the year-over-year gross margin decline, but emphasized efforts to manage costs, implement price increases, and focus on financial discipline to grow EPS faster than revenue. Management's forecasts and guidance. Q3 fiscal year 2026 guidance. Revenue, $15.4 billion to $15.6 billion. Non-GAAP gross margin, 65.5% to 66.5%. Non-GAAP operating margin, 33.5% to 34.5%. Non-GAAP EPS, $1.02 to $1.04. Non-GAAP tax rate, approximately 19%. Full fiscal year 2026 guidance. Revenue, $61.2 billion to $61.7 billion. Non-GAAP EPS, $4.13 to $4.17. Significant risk factors, supply chain and component costs. The transcript highlighted the impact of increased memory prices and the strategies Cisco is employing to manage these transition challenges. The shift in Splunk's business model from on-premises to cloud subscriptions is creating short-term revenue headwinds. Execution risk. Successfully delivering on the significant AI infrastructure opportunity and managing complex customer deployments remains critical. Geopolitical and macroeconomic factors. While not explicitly detailed in this excerpt, general macroeconomic conditions and geopolitical uncertainties are always potential risks. Lowlights. Security revenue decline. The 4% decline in security revenue, largely attributed to the Splunk transition and legacy product declines, was noted. Gross margin decrease. A 120 basis point decrease in non-GAAP gross margin year-over-year was observed, primarily due to product mix and memory costs. Important future outlook statements. Cisco is confident in its ability to deliver its strongest fiscal year yet, driven by the massive AI build-out and the capabilities of its Silicon One architecture. Growing opportunities in enterprise, sovereign, and neocloud AI deployments. The beginning of a significant campus refresh cycle. The company reiterates its commitment to innovation, disciplined spending, and returning value to shareholders through robust cash flows and consistent capital returns. This concludes our summary of Cisco's Q2 fiscal year 2026 earnings call. We appreciate your attention.